The next objective of financial management is wealth maximization. Wealth maximization is nothing but creating the wealth to the shareholder or increasing the value of the shareholder. It is set of activities that manage financial resources to increase the value of stakeholders. When I said to increase the value of stakeholders, so who are stakeholders? Okay, usually people will feel them as shareholders. Shareholders are the holders of equity shares of the company or preference shares of the company. They are called shareholders. But when it comes to stakeholders, all the entities which are directly or indirectly related to your company, all of them they are considered as stakeholders. So shareholders or stakeholders are a part of stakeholders, but stakeholders are not shareholders. Okay, all stakeholders are not shareholders, but all shareholders are stakeholders. So stakeholders means your shareholders, the buyers of your product, the employees of your organization, the suppliers of your organization, government, etc. Those who are having direct or indirect link or relationship with your organization and society is also part of your stakeholders. So all this, when they'll become part of your organization, are directly or indirectly impacted by your organization. So here, by taking into consideration of all the stakeholders' opinion and increasing their value is considered as wealth maximization. So it takes into consideration the risk and uncertainty factors. So again there will be a confusion between risk and uncertainty. So conditions are three. Let me clear you here itself. One condition is certainty, another condition is risk, and another condition is uncertainty. Certainty indicates the probability either 0 or 1. Means an event will not occur. This is 100%. And an event will guaranteely occur. That is also 100%. So that condition is called certainty. I am having 10 rupees. Yes, I am having 10 rupees. That is certain. Okay. I am expecting that 10 rupees to increase 100 rupees. That is not certain. I don't know. Okay. So certainty means the probability is either 0, the event will not occur, and the probability is 1. So the event will occur 100%. Uncertainty means where we could not assign the probability. We doesn't know. Okay. Then that condition is called uncertainty. Risk means whose probability is greater than 0 and less than 1. Means from 1 to 99.999%. Okay. Then if you are going to assign it, then that is considered as risk. Okay. So it means now wealth maximization is taking into consideration the risk and uncertainty factors. Why? Because business is aimed towards future and future is uncertain. When uncertainty is there, uncertainty brings risk into the business. So wealth maximization is taking into consideration of the risk and uncertainty. So this is the second factor. And it aims with the long-term growth of the firm. So mainly it concentrates on long-term growth of the company. Why? Because it tries to attain leadership position in the market. Means the concentration of wealth maximization is mostly on attaining market share or attaining a position of leadership in the market. So it is concentrating on long-term growth. When we say long-term growth, it is taking into consideration so many factors like production, sales and everything. And one more thing we need to know is, when we say that long-term is a combination of various short-term objectives. And you know that short-term objective of any organization is what? Profit. So it takes into consideration the profit also. And next one is, it concentrate on maximization of return to the shareholders. Maximization of return to the shareholders. So here already we have discussed in this here that earnings available to shareholders. Clearly, wealth maximization is concentrating on increasing this earnings available to the shareholders. So that is what maximizing the returns to the shareholder. So this is about wealth maximization, and it concentrates on creating value or wealth to the shareholders. And